Welcome. Thanks for joining me today. In 15 minutes, we'll build a personalized financial model that gives you clarity on profitability, cash flow, and runway. This session is for you to have a better understanding of your business's financial picture overall. Without it, you'll be more into guesswork versus making decisions off hard data. Lastly, if you're feeling overwhelmed with operations and finances, having a model in place will allow you to focus on running and growing the business instead of being so bogged down with spreadsheets. You leave that to me. Now let's open up. I already have the workbook open right now, and let's confirm the business name and product pricing and assumptions. So typically here in a session such as this, I will go through and identify. Of course, I would already have your information, such as intake information I already provided. So I would have your company name. For example, I would already know the specific intakes in terms of like what type of product that you're delivering or providing to your potential clients or target customer, as well as the different type of expenses here. So this is just an example overall, and then in terms of the your long-term assets, PP&E, property, plant, and equipment, I have an understanding of how to depreciate that over a period of time, whether if it's monthly or on an annual basis. Now, of course, I would calculate it on an annual basis initially in terms of my research, but then I would break that down into a monthly depreciation cost on your particular asset, long-term asset. And then down here, we will go over the balance sheet drivers. So you have the income statement drivers. This is where the majority of your work will come into play in just our discussion and figuring out what is best uh, for your business model and your approach and your particular goals that you're trying to accomplish overall. And then we will go down, walk you through the balance sheet drivers. So, for example, accounts receivable in days. How long does it take for you to actually receive payment from your clients or customers overall? Does it take 30 days? Does it take 7 days? How long does it take for that particular sale to hit your bank account? Then you have other factors in here in the balance sheet, again, such as the PP&E, property, plant, and equipment. What type of items are you purchasing for the long term or the sustainability of your respective business? I mean, this can go from a laptop all the way to a vehicle to an actual property, residential or commercial. In terms of debt, um, we will tap into accounts payable in days. So again, what is to be paid within a year's time frame. Um, um, and then also the current portion of long-term debt. So this is basically the payment that you're making within a year of a particular loan that you might have received. Then we'll tap into the cash flow statement drivers here. I have an example of loan details. So these loan details, this is all can be changed. So at the top left hand corner here, you see where certain specific cells are linked to other cells, the calculations, and then also the input. So as a founder or an owner, you yourself, me and you actually will go through this model and determine which is the best inputs that you see is feasible for your respective business or company, as well as nonprofit as well. How you are receiving your sources of revenue overall. And then once we do all of our work here in this particular section, we it automatically translates throughout the income statement here. This is a simplified income statement. I've seen income statements where they are can be highly complex, as well as financial models that are highly complex. And so my goal is to keep things as simple as possible. Keep it simple, stupid, the KISS principle that I've been kind of ingrained into my head and my financial courses and just overall profession and career overall. So this is a simplified basic income statement. Now, of course, these things such as OPEX, operating expenses, can be broken out. This is based on the specifics of the respective business or nonprofit, of course. But you'll notice in the input section here, a lot of these expenses are already broken out, but it can be transferred to the main statement here. Next, we have the balance sheet. So here, again, this is a simplified balance sheet. Again, I was running this during April. So again, this financial model workshop was beginning in April, and so I could do a reconciliation of the prior months if you are an existing business. Trying to understand the financials that you have available. Again, the first quarter just ended, so hopefully, at least by the end of this particular month, end of April, but early May, you will be able to reconcile your performance from January through March, and then I can reconcile that on my end to see if there's a particular trend to how we can set that up for the following 12 months to be covered. Again, then here at the end, you have the cash flow statement. So this allows you to see. Um, some people can call it your cash runway, but the sources and uses of cash overall at the end of each month. And typically, this ending balance is what you'll see in your banking checking account, your business banking checking account overall. And so, again, this is just an example, but I kind of want to make it very simple as possible in terms of comprehension, as well as a learning tactic as well. So then you see here at the top left hand corner, I create an icon to ensure that the balance sheet is balancing. So if you're ever working with somebody and you notice the balance sheet is not balancing, you might need to, you know, check with somebody else on that. Or reach out to a different professional, because at the end of the day, the balance sheet has to balance. Assets equals liabilities plus equity. Now, again, if you come across someone that says, hey, provide me your cash flow statement, and they're unable to produce the cash flow statement with just an income statement and balance sheet, that's also a red flag. So be considerate of that as well, because the income statement and the balance sheet, it actually makes up the cash flow statement overall. And so this is just a brief overview of what the financial model forecasting entails overall. And then when you come to the summary section, and so this is broken down by quarters. And I can open this up a little bit just so you can see. Again, it just provides you a quick summary of what each month entails in terms of income statement, net income, net profit or loss, as well as what you owe and what you own in terms of your balance sheet summary. Again, a balance sheet is just a snapshot of a particular point in time. It's not like a running statement similar to like the income statement here, where you see Q1 values are totaling up here. So typically you'll see in March end, Q1 end is pretty much the same reflective totals for each quarter in the balance sheet. Same thing will be applied to the um, the cash flow statement as well. It's like a period of time. And then down here are the KPIs, the key performance indicators. Here, you will identify the key metrics in terms of profit. We will identify the key metrics as it relates to your respective industry of business in terms of profitability metrics, liquidity ratios, activity ratios, as well as the leverage if you are have any financing going on overall. Now, these KPIs will be adjusted based on the particular industry or trade that you're operating in. I try to do research on my end to identify the key performance indicators that's relevant to you and your business, and how you should be considerate of those in the long term. Because what this does is give you leverage. And what I mean by leverage is it gives you the ability to, when you're applying for a particular loan, or maybe even a grant, or maybe even investments, you actually know the margins, the KPIs that is essential to your business, to where you know it on like the back of your hand, and then you're able to negotiate certain financial covenants that is in the loan, right? So let's say, for example, you need to have a minimum net margin of 25%. But historically, you've been operating at 35% for the past 3 years, or 6 months, give or take. I know 6 months is a short time frame, but overall you have an idea of where your operations is performing overall, so you can have a little leverage in determining or assisting or negotiating those particular metrics, based on the financial covenants that your lender is providing you. And then I don't want this to be a one-stop shop, so I also provide definitions so you can understand for your each particular account that's in your forecast. It has specific definitions so you can understand. You can always refer back to this as a reference list to understand what each account means and how it is calculated, right? So this is not something that you can just like, oh, I forgot what this means. You can actually go back and see how everything is calculated overall, as well as understanding the basic definitions of the financial model. And that is a financial model workshop in a nutshell, in terms of just a brief overview.